Hello and welcome to tonight's business edition of PM Express. My name is Philip Nanfuri, and tonight we have one key question to discuss. The microfinance mission in Ghana. Are we on course or we are off course? Is it a mission impossible or it's a mission possible? And that's all we're going to do tonight. Microfinance plays a critical role in our economy, particularly because of our developing nature. If you look at other parts of the world, microfinance has really touched the lives of low-income earners and how far they've come with their livelihoods. But when you mention the name microfinance in Ghana, it's almost synonymous with a lot of negative vibe, if I can call it that. People losing funds, people losing lives, people losing livelihoods because of it. But microfinance didn't set out to hurt people. It set out to help people. So we're going to look at it tonight and find out how exactly, with the impending reforms, we can make this sector more robust, concrete, strong, better for the low-income earners and the larger financial stability. We put together a number of, let me say, fun facts, as I like to call them, graphics on the microfinance subsector. We'll play two of them. I'll give you the first one now. So like I said, it's the provision of financial services, microfinance, provision of financial services to low-income earners. As you can tell from the graphic, over 400 institutions in the microfinance sector, particularly in the Tier 2, where you have 484 as of August 2018. And this data is from the Bank of Ghana. Now let's look at the second one, where it looks at specialized deposit-taking institutions. And some of the microfinance, in fact, all microfinance are part of specialized deposit-taking institutions, but it's broader. It includes savings and loans, it includes finance houses, rural and community banks, etc. So just look at this second one. So that was a snapshot of the specialized deposit-taking institutions as of April 2018. Of course, I'm sure in the coming months, we should see an update on these figures from the regulator, that's the Bank of Ghana. Now, to my guest, one astute gentleman and an astute lady to help us navigate the waters of microfinance. I'll introduce the lady first, obviously. Her name, Akofa Ahiafo. She's the Managing Director of GHAN Microfinance Limited right here in Accra. She operates from Atomic area in Accra. Second guest, Roderick Aye. He's also a microfinance consultant, man of experience, and he's well versed in these issues. So that's Akofa Ahiafo, Managing Director of GHAN Microfinance, and Roderick Aye to help us navigate the muddy waters of microfinance and make you and I better informed. After this, we're going to take a number of videos from the policymakers, the regulator, that's the Bank of Ghana, and from the Finance Ministry. And then we'll set the ball rolling. This is the business edition of PM Express, and my name, Philip Nanfuri. thanks for staying with us. Now we're going to hear from the Governor of the Bank of Ghana, that's Dr. Ernest Addison, on exactly what he had to say at the most recent Monetary Policy Committee press conference that was held last week. Let's listen to what the Governor had to say.
We have already announced that that would be the next phase, and that we would be focusing on to look at ways in which the depositors there in that segment of the market could be taken care of. And we were working with the Ministry of Finance to raise the necessary resources to do that. I can assure you that we are in the second quarter. Hopefully, during this quarter, we would be able to bring that issue to fruition, because we are close to obtaining the resources that we need to deal with the microfinance institutions. And the number and the estimate, the preliminary estimates that we have for microfinance institutions is just under 700 million. It's certainly not 7 billion.
So that was the Governor of the Bank of Ghana, Dr. Ernest Addison, speaking at the Monetary Policy Committee's press conference last week, or last 2 weeks, if I can say so. And he was talking about what's going to happen in the microfinance subsector. Let's listen to what the Finance Minister also had to say at the town hall meeting, the Economic Management Team's infamous town hall meeting.
With regards to the banking issue, yes, we do intend to tackle the microfinance one. I think the estimate is around 953 of 53 odd million CDs that we actually have put in an escrow account to be able to tackle that. And then there's the SDIs, which is the savings and loans institutions, etc. And approximate is about 3 billion that it will cost us. So we need a plan to get through that.
So that was the Minister of Finance, Ken Ofri-Atta, speaking to the public at the town hall meeting of the Economic Management Team. And two figures are clear: 953 million for the, as he put it, for the microfinance institutions, and about 3 billion for the specialized deposit-taking institutions, which, like he said, and like our infograph showed you, savings and loans, rural and community banks, etc. So, but tonight we want to focus on the microfinance institutions. They are really critical because they serve the lower end of the market, where the banks in their fancy suits and cars will not dare to step. So, without further ado, I'll cut to my guests, introduce them again, then we'll get the conversation going. Ladies, gentlemen, thank you very much for joining us here on PM Express.
Thank you.
Thank you.
Okay. So, Akofa, I would want to start with you on this. The importance of microfinance cannot be understated. And as a practitioner, you are extremely well aware of the importance it plays in the lives of people below the income lines, the low-income earners. And several economic authors, the World Bank, have written extensively, have put papers together on the importance of it in the financial development of the livelihoods of low-income earners. Yet, when we mention the name microfinance in Ghana, it's synonymous with bad things. I spoke to people during this week, asking them for stories of good news on microfinance. No one had a positive story. All the stories were negative. Why is that so?
Good evening to our viewers, and thank you for the opportunity. Now, we all know that microfinance has been with Ghana before the regulation, before Bank of Ghana came in to regulate the sector. Mm-hmm. Now, generally, the people we consider poor wouldn't want people to know they are poor. So if you want people who have had interaction with that poor, so-called poor-oriented institution, of course, you will not find those who have benefited from it, because now we have a bad name, so nobody wants to align with us. But microfinance, as you have said, all over the world has played major roles in providing financing to, businesses, mm-hmm. providing means of savings. You see, people feel embarrassed walking to the bank by virtue of their nature. But with the microfinance, they freely walk into our institutions. And we also have people on the field that go to take monies from them. So don't really need to move their cars or anything.
Okay.
Some are using mobile monies now, but the other transfer services that are done, really in Ghana we are limited to few services, deposits and loans. That's what we are limited to. But microfinance has played major roles. School fees, working capital, rent, just name it. There is no kind of loan that the lower end market is not able to access from the microfinance sector. It will interest you to know that some of the elites do business with microfinance. Why? Because we raise money from the poor, from the rich to the poor. So microfinance has provided income to the high income earners. They may not come out to say that, look, through microfinance, I've earned interest on my deposit over the years worth this amount of money. But we have given them a lot of interest. And then some of the elites take money from us, pay their children's school fees outside Ghana. Change monies from, monies they've taken from us, change into dollars and pay school fees. So microfinance has not just served the poor, but it has saved the high network individuals as well. And microfinance has saved institutions. We have a lot of institutions that deposited monies with us, and we make a lot of interest for them. And for my background in the microfinance sector, proud to setting up my own institution. There are very significant companies now in Ghana that are doing well, that have invested with microfinance over the years, yes, and have made a lot of interest from them. So I was saying that microfinance does not only serve the poor, it serves the rich. We provide the income for the rich and then facility to the poor.
So it's clear that the stories are not only negative. There are a plethora of positive stories in there, but the negative dominates in the Ghanaian market. Now the finance minister says the estimate for this reform is 953 million. Roderick, in your estimation, this figure that they've put out there, from where you sit, do you think is enough? Okay. Do you think it is even appropriate, or we can't even estimate the problems in the sector?
Thank you. Largely, we are dealing with microfinance. So I put a figure by the governor as well as the finance minister, and then I arrived at an average of, let's say, 1,000 Ghana cedis. When I picked it from the theoretical part of microfinance, it makes a lot of sense, because if we're really targeting the right people and the right persons, what is happening is that we are looking at around 750 million as against 700 and something thousand clients. That gives me the average. So when I do the outstanding deposit amount as against depositors, then it gives us some kind of nearness to the reality on the ground. I wouldn't doubt what is happening, but it's important for us to know that beyond paying depositors, we may have to move to the next step. It's important for us to know that the importance of microfinance, especially in Ghana, it's so huge as we speak. The microfinance institutions actually serve more than half of the banking clients, and the record is clear. When we are looking at in terms of assets, the microfinance, and let's say the rural bank microfinance would form about 7% of the total assets of the banking sector, is actually very small. But when it comes to outreach, which actually is a major determinant of financial services, the microfinance institutions serves more clientele than the universal banks. So that alone, on the face of it, gives you an idea. And let me tell you, there's a book I read, I've forgotten the book. It says that when you really want to understand the business and the importance of microfinance, go to where the poor is. On phone you can get different stories, but if you go to places, there people would tell you real life stories. I've been to places where even poor women would tell you, if I say poor woman, a poor woman will tell you that I would want to buy an aeroplane. beyond that she cannot buy, but because of the financial assets and the sort of the non-financial support that has been given,
yes,
this woman out of her poverty can dream. So these are some of the stories that are on the field that actually points to the fact that microfinance, if done well, would actually give us the stories that we are hearing of.
Two profound things I'm taking away from what you're saying. One, the outreach, and this ties in perfectly with the financial inclusion agenda. I've heard people make the argument that the universal banks, and not to chastise them, are not really particularly suited to drive the outreach and the financial inclusion we need, particularly because of the preponderance of their branches within the urban areas. A few of them, the GCBs, ADBs, you will find them in the hinterlands. And this is where the microfinance steps in. The second one has got to do with the financial and social intimidation, which you just mentioned. Apart from making sure that people are sorted out with credit, savings, etc., the other part, the development of business, developing their businesses, helping them even develop their skills, their understanding of things in the nature, is very key. The structure of a microfinance institution. Last year, there was so much banking news that for a minute I thought I could go and open my own bank. Because every time you put on the radio, even as we sit here, banking issues. And one thing that came up was minimum capital requirement, 400 million. They said merge or die, or whatever the mantra was. Now, microfinance, in my discussion with Akofa before we came on here, we were looking at the progression of it. And Roderick, I'll come to you. I'll pick Akofa first on this. 100,000 to 500,000 to 2 million. Is that right?
Yeah.
In this reform, in the banking sector reform, we saw the change in capital. Akofa, do you think we should look at this capital requirement, we should touch it, or we should leave it where it is with the 2 million?
Okay. Before I answer this question, I realized that we did not touch on some other aspects of microfinance.
Okay, please do.
We provide jobs. I'm sure you can get some statistic on the number of employees of microfinance institutions. Yeah. And we do a lot of training that goes unnoticed. Microfinance companies have more time with customers than I would say our traditional banks, because for you to take your time to explain business in a language, local language, it's a lot of work. And microfinance companies do so much of that. Don't forget, we're also paying tax. We contribute to the economy in so many ways. So looking beyond loans and savings, microfinance is one of the sectors that also support the nation. And we should not forget about that. Okay, now talking about minimum capital, you know, the size of a financial institution would determine the amount of money that it requires to operate. Indeed, when they were starting the regulation, I know that Mr. Jandu and co were part of this whole discussion as to how much should be capped as minimum capital. Given the existence of some of the companies already and what they were doing, they thought that it was okay that at least 100,000. Over time, they realized that, look, by the time you rent your office, put computers, furniture, and other things, the 100,000 wouldn't be enough. So they increased it to 500,000. Then by our own action, we the practitioners, the volume of businesses we're doing, the kind of places we're renting, our branding.
The expansion of your businesses.
Require that there is some increment. As to whether 2 million is appropriate or not, I think it depends on the business and what exactly we are expecting from these institutions. We have some companies that are located in some areas that do not, would not need sophisticated offices, equipment, and branding. So if we should use a typical setup, especially those of us in Accra, compared with those who are in the rural areas, 2 million may not be appropriate for everybody. You know, so to some extent, depending on what we are doing, yes, having more capital is good because you're able to do so much more. You'll be able to reach a lot more people. You'll be able to, undertake some research work. So 2 million is not a bad idea. As to whether our businesses require it, is what will need to be discussed. And I know it has been discussed extensively, and our regulator is is on top of this, is in touch with all the institutions, so they know what is required. And their judgment of 2 million, I think they are in the best position to determine, because I don't think that everybody needs 2 million. Okay. And we all know that we may all not need the 2 million.
Okay.
So that's my thought on it. So what comes out, behind that is the proposal of measures and other things that I think will come up later for us to discuss.
Okay. Roderick, 100,000 on the surface looks relatively cheap. I know I can't afford it as I sit here now, but I'm sure everybody can just quickly go into it. Then 2 million looks a bit expensive, but still affordable. Wrap this for me. You have an amount that's low enough to allow high entry, and one that's a bit high enough to limit the entry. At the same time, we should have the sufficient capital to absorb the risks that are coming from dealing with the low-income community, because I would assume that they have a lot of risks. Please tie this for me. Good.
Before that, I am actually one of the few who don't actually believe that the capital requirement is really so much of an issue as we speak in regulating the microfinance sector. And I said it when they moved it from 100. The purpose of the capital requirement has, for me, two purposes. One is the regulatory entry point. Before you come in, you meet it. Then the other part is the risk aspect. If you look at microfinance as we speak, the sector actually should be dealing with small clientele, in terms of volumes. And so if you look at the risks that they would actually expose themselves as against an amount of capital is actually low. But I also must admit, the actions and activities of the microfinance institutions themselves, when they started engaging higher loans, of course, then it created the need for a capital amount that can, take care of their risk. And so we are dealing with entry. What we need to understand, and we ask ourselves, what exactly do we want, one, microfinance institutions to do in this country? And two, what exactly do we want to use the capital requirement to do? What I indicated is that when we raise it higher, what will happen is that the people who can meet the capital requirement may come in, but they will come in with a different mindset. Remember, microfinance has, we are talking about, let's say, three objectives. We are talking about impact, we are talking about outreach, and we are talking about sustainability. If you allow anybody with a higher capital to come into microfinance, what we are going to see, or what we have seen, is that each one of them will move towards the commercial aspect. The commercial aspect is that I give loan, I take my repayment, whatever happened to the client, it's not my, I don't care. But the concept of microfinance is not only to extend the loan, but to build the human capacity, which we call the impact of the client. Okay. And so that is one thing that capital requirement can do. What you would do is that we raise the bar, we meet, but the truth is that because you raise the bar and we have the capital, we are only looking for our profitability, and nobody actually can hold them responsible to it. So we need to also ask from what we want microfinance to do and what we want to use the capital requirement to do. If we are using it as a barrier, fine. If we are also using it to direct the other aspect of microfinance, we would have to reconsider. And again, I think it's also very important for us to know that if you look at the capital requirement, the effect of it is that where microfinance institutions are largely located are where the universal banks are. So you go to Abuso Kai, Agbobulushen, you find the microfinance institutions there. Just next door, you find a universal bank there. Why? Because they actually see businesses in those areas, and they actually would also have to report to their shareholders. So once you move along that area, Kumasi, you have a lot of banks. Microfinance institutions. Once you move to the interlands where we actually need more microfinance, nobody is going to raise 2 million capital and go into some areas that they would have to struggle. So these are some of the fallout of the capital requirements. I wouldn't say 2 million is low and I wouldn't say 2 million is high. But the point is that we may have to decide what actually as a nation we want to achieve with microfinance and then set the tone.
So it becomes more or less like a balancing act, because
Absolutely.
if we don't take care, we start going into commercialization.
Absolutely, and we are there.
It becomes, and then I think that's what most of the people I spoke to suffered from, because they go and deposit, and I'm sure they gave loans to people that were into risky businesses, and I think it defeats the whole purpose of microfinance. And Akofa mentioned something very interesting. She was talking about measures, and I was just sitting down here and I was thinking, if even in the tier 2 section, as at August 2018, there were 484 of you, and then some of you were asked to merge, I think that would be very messy. Because Kumasi, Ashanti region, it will be all over the place. But you mentioned something very interesting, Roderick. I'll pick your thought on this and I'll come to Akofa. Moving away from what they are doing. And you and I have spoken about the concept of mission drift before. During my time, during my master's, it was something that featured prominently in my microfinance class. They were talking about mission drift. They said most of the people are moving away from what they're supposed to do. Explain to us in very simple terms, to our viewers and listeners, what that mission drift is and why we're experiencing it in Ghana.
Well, I mean, mission drift is largely changing your mission. And in the terms of microfinance, the mission was to reduce poverty, not eradicate poverty. So reducing poverty goes beyond just granting cash. So training, support services, counseling, financial literacy. So you are set up to do these two things: provide the funds and as well the support system to build the human capital. But over time, because the concentration became something on profitability, we look at the bottom line. How much am I making from this transaction? I give you the loan and then you pay me. When the institutions noticed that the kind of clientele they were dealing with as against the high costs they were running, they knew they could not keep to the kind of clientele in terms of the microfinance clientele, which you can actually describe and categorize them. So they shifted from the low income earner, the poor, the productive poor, to, let's say, the salaried worker. And they moved from the salaried worker to somebody who actually can take a loan from a universal bank. Because if you look at the microfinance system, because it's a bit smaller and they don't have so much structures, when you present a loan to a microfinance office and then a universal office, all things being equal, you can get a decision from the microfinance institution faster than the universal. So you have banks, you have clientele who were clients of universal banks and still clients of microfinance institutions, and they were juicy. And so the microfinance institutions stopped actually concentrating on their main clients, who are the poor and the low income, and to serve people like people who actually can pay their loans. So largely, that is what we call the mission drift. Yeah.
Akofa, you've been told to go to school to go and study mathematics. As you are going to school, then you decide to pass the right lane. You buy something from here, you take the left. In the end, you don't end up in school to learn your mathematics. I see practitioners, I see regulators, I see clients. Should we all share the blame for this mission drift, or we should leave it on the regulator? Because Bank of Ghana obviously is a regulator of this institution. Or we should blame it on people like me who are greedy, looking for interest, or people like you who are running the institutions. How do we balance this between the regulator, practitioners, and clients?
Okay. The first thing is that the institutions we have in our countries are reflections of who we are in the country. Now, saying that there is a mission drift, I think it's a lighter description of microfinance deviation. I will start from with the practitioners, and then to the client, to the regulator, and to the society. Honestly, if you should take half, about 200 microfinance, I'm talking about tier 2 practitioners, I can tell you for sure that at the time of entry, we were not thinking about social mission. You went in because there is a business opportunity. And so the purpose is to be able to provide service and get money, in return. Basically it's financial intimidation, so we are talking about money. So I was expecting that at the point of entry, there can be some licensing procedure that will open the eye of that practitioner who is coming to register that business that, look, what you are entering in, we have the social and the financial mission. Are you ready to go in or not? Then there would have been a decision. So from that side, I think there's a gap. And then a typical customer who walks into these institutions to access whatever service is also not thinking of dual mission. Our customers come to us because they need financial assistance. The fact that we are supposed to help them come out of their poverty is there. But the business environment does not project that. Okay. Because one, which money is that practitioner using to give to the poor? Where is the person getting the money from? It's a businessman who found some business opportunity. And then it is also money that we borrow from the public at a cost. Now, how would you take expensive money and use it for social mission? So the funding sources, that's the shareholders, then the depositors, the investors, do not understand. I would say that we did not understand what social mission was at the time that we're entering. Thank God, through education over the time, we've all realized that it's not that we have drifted. We did not know. So when you say we drifted, it's like you know and you have drifted. That wasn't the focus. So when you enter, then you realize that, oh, this business that I am doing, this is an aspect that is critical. Part of it. So the practitioners were not aware that that was a requirement. Customers themselves came for facility and they were satisfied. And then the regulator created the environment. Now, the reason why I said it was understatement is that we as a nation or society, we did not understand microfinance. And so that is why we will not provide the regulation. And that's why we will not enter with that mind. And that's why the client who is coming to access the facility wouldn't think about that. So we, as a nation, we did not know. We did not understand it. But gradually, we are getting them. Okay. Now, I would say that the microfinance service sector that you meet now is not the one that was. Okay. We've gone through a lot of training. And I say to the credit of MISIP, that's Microfinance Capacity Improvement Program, that was sponsored by AFD. Earlier on, we had institutions like GIZ and other institutions that were supporting the industry. But the longest that has happened to the industry is what we just ended. About 30-something months. Okay, of training. Yeah, yes, thereabout. Yeah, training. And we're taking through these mission issues. Okay. I mean, our business models, our governance, risk, we were exposed to so many other things that we ourselves did not at the point of entry. And the Bank of Ghana also has done some good job. Honestly, there has been more training than before. Now, another issue that we had is that we saw the regulator as someone just bringing laws and regulations to prevent you from doing business. Yeah. The understanding that what the regulator was putting in place is to prevent you from failing. If we really understood what the regulations were about and how they were carried out, I'm sure that what we are experiencing now wouldn't have happened. Because at the time that some of us were setting up about some 5 years ago, you have people who tell you how to dodge the system. How you're supposed to go and borrow money and present it as your own money, as your capital. With time, you start paying interest on money that is supposed to be free. Customers are chasing you for the money. And that explains the early exit of most of the institutions. And all the institutions you see right now, I can assure you that they are institutions that have done something right some years ago. Otherwise, there's no way you survive till now. Because I don't want to talk so much about the news about us and how, the public reacts. We, particularly in Tier 2 microfinance, anything that has to do with SUSU, FNGOs, money lenders, now microcredit, savings and loans, rural banks, any institution that does anything falls on the microfinance companies. We those who have microfinance against our name. Whether they come, it's a Tier 2 or Tier 3 or Tier 4 or Tier 1, they say microfinance. Then you see people rushing in to take their money. So you can imagine if you borrowed even your capital, what would have happened? So it's a lot. And then the issue of borrowing, institution lending in Ghana is a big issue.
Okay.
You see, look at this investor who brought this money. That is somebody's retirement money. That's somebody's, lifetime savings.
Indeed.
As given to microfinance people. Then a typical Ghanaian walks in with very interesting stories that prove business and also some level of improving the life of that person. A typical Ghanaian will show you that he or she understood perfectly what you were selling to him or her. They buy it. The moment they take the money, a typical Ghanaian has a different use for the money. And then turns around to say that I did not understand what it means. And then a typical Ghanaian also thinks that when I borrow money, I have to pay principal.
And not the interest.
Demanding the interest
is a problem.
It's a problem. Now, the people who are giving you the negative feedback, I wish we had opportunity to speak to the companies they are borrowing the monies from. They will tell you a different story. And we want to align with good, institutions, of course. Bad news sells. So anything bad sells. But the good things, people who have enjoyed these services, including institutions that I'm talking about, nobody wants to say it. It's not because there are no good news there, but it's because our understanding of what microfinance is supposed to be doing, from regulator to society to the client to the practitioner, we all did not get it.
Lost.
It is now that we are developing. And so I think that the future of microfinance is better than the past.
Yeah, just to put.
Okay, Rodri, please. Just
interestingly, wherever we are today, we didn't get here accidentally.
Okay.
10 years ago, on Capital I've written about it, and interestingly, if you look at the number of jumps we did, Uganda, Kenya were ahead of us in terms of the regulation. Mm-hmm. But when we came in, we did more jumps, which also had a bit of destabilizing the microfinance sector, because when people plan for capital requirement, they plan for capital requirement. And maybe out of reserve, you build up. But it's not something that actually is introduced within a space of time. But in the case of the Ghanaian microfinance, we had almost about 3 jumps within a short, I think, let me put it 3 years, that I felt was a bit of a challenge. And then if you look at, in terms of the business model, as she said, we didn't actually have a business model. The issue is that we have a very well-structured financial system, which actually is being led by the universal banks. Clients actually see microfinance institutions as banks. And this actually affected the psychology of the microfinance institutions. So microfinance institutions started acting as smaller banks. In terms of operations, in terms of the psychology, in terms of product, which actually also short branding, which actually
that's one key issue. That's one key.
So we actually walked ourselves into this process, but of course, the future looks good.
For lack of microfinance education, my people lose their livelihoods. And you heard it here on the business edition of PM Express. My name is Philip Nanfuru, and my guest, Akofa Ahiafo, she's the managing director of Jure Microfinance, and Roderick Aye, he's a microfinance consultant. We'll take a quick break and we'll be right back. Thanks for staying with us. This is the business edition of PM Express. Now, before we go into the break, my guests were taking us through the possible causes of why we are where we are now when it comes to the microfinance sector. One key thing that stood out for me was the education. We were not aware of what we are doing. But however, as time went on, things have been put in place, education has been given, training has been given, and the future of microfinance is going to be much more robust. Now, I'm going to take from each of them what the nature of the incoming reform should be like and what solutions we should put in place to make sure that we don't come back to this problem. So I'll start with you, Roderick.
Okay.
The nature of the reform and what we should put in place to make sure that we don't come back to this area.
Great. Well, I think it's important for us to understand that the reforms are very important. We need to do it. And the other positive note is that if you compare other microfinance crises, like say in Morocco, and then in India. I mean, once reforms came, actually the sector grew again. And so we're on the path. What I think we need to do beyond just paying or putting money to save depositors is to look at how we have structured the microfinance sector in Ghana. We should be able to structure it in such a way that institutions that feel would want to stay in Accra would pay a certain capital level. Institutions that actually want to stay in the interland will pay a certain capital. I mean, let me borrow simply from the Nigerian sector. If you want to stay national as a microfinance, your capital requirement is different. If you want to stay regional, your capital requirement, we can do that. And then we should also look at, I still believe we need a fund. I mean, an on-lending fund, or a fund that microfinance institutions can actually fall on and actually extend on-lending loans to their institutions. Another critical point we need to be looking at is the apexes that we have in the microfinance sector. From my view and from a lot of work, I think we have too many apexes. And what happens is that when you have too much or too many apexes, they begin to form, everybody protects their turf.
So when you say apexes, you're referring to?
I'm talking about like GAMC and
okay. So the different associations.
The different associations. Yeah. We also need to streamline that so that we can have directives coming from one apex body actually going through the entire industry with the same information, with the same standard, and with the same objective. That one is also very important. Fine, I think we are doing a bit more with the capacity building.
Okay.
Capacity is critical.
Okay. Unfortunately,
for most people that are found in microfinance, or the concept was that once you are done banking, you can do microfinance. But the truth is that
it's different.
It's different.
Yeah.
Microfinance is more developmental than a debit and credit, activity.
Okay.
And so we also need to have capacity in that field who can actually install, implement, and direct microfinance in such a way that at least we can have two bottom objectives, which is our sustainability as well as our impact. Okay. Beyond that, we still would have to rest on our universal banks.
Yeah. Okay. Akofa, the nature of the incoming reform and what you think, in your estimation, we should lay on the ground as concrete reform so that we don't come back to a messy situation where people are always complaining about microfinance institutions.
Okay, I think Roderick has mentioned basically the very essential things that needed to be done.
Okay.
And on many occasions, we've been told that financial services institutions strive on 4 pillars. They said regulation, recourse mechanism, deposit protection, and lender of last resort. Now, I would say we have enough regulations. Anybody who wants to do this business now knows what to do. And then we have a recourse mechanism that came last year or so. Those acts were enacted last year. And then deposit insurance is coming this year. So the issue of fund is critical.
Okay. So both of you agree on that?
Which is, now, nobody thinks of where microfinance people raise money from for business. And we borrow from the banks with cash deposits. When you go for overdraft, you deposit cash. Now, how much do you get the cash? You are depositing, and then you are lending against that one. Then the customer takes it and now tells you that I am paying principal. That is critical. So the funding bit becomes very important. So if this reform, as has been said, 700 million, 950 million, those monies come. As a practitioner, I don't know how it's going to be like. But if it's coming to support the institutions, that will be perfect. Yeah. That will be the ideal thing. I think we need to clap for the government and praise them forever if they are able to do that, because for the very first time, there will be such a fund to help. I know our colleagues in Nigeria, they borrow at 2% per annum, and we borrow at 30 plus. It's now that interest rates are coming down little. So it's very important. But I also think that our services will need to be expanded. Now it's basically loans and deposits. Even mobile money, we do not have license to operate. And then other transfer services and insurance. Those are all microfinance services over the world. And so being limited to these 2 aspects, I think will not help the industry. And then one thing that is critical after educating the practitioners, we should do a lot of training to Ghanaian populace for them to understand what it means to borrow from an institution, I mean, to deposit us. Because once people do not understand, their behavior towards the services become destructive. Because I said this many times on this program, because, I mean, on this kind of programs, because one of the basic problems we have is that Ghanaians have bad borrowing practice. Once they borrow money, you know all the adages that talk about money. Payment is a problem. And then most of the lending institutions, to some of them too, they are not on the credit bureau. So it is difficult to even assess a Ghanaian and lend to that person.
Sorry to cut you. Do you guys have access to the credit reference bureau?
Yes, we have. Yeah, they do. But there are other institutions that lend, but they are not there. So if you want to analyze a typical Ghanaian, you have half information. Of course, the family and others will not give you information, so you have limited information. So if all these people are, I mean, compelled to use the credit bureau, it will assess, I mean, it will help us a lot. And the last thing I want to say on the way forward is that the people will need to know that microfinance practitioners are not greedy people. They are not greedy, and then microfinance investors are not greedy. You see, it's our mentality towards these people prevent them from owning up and telling you how much they have been able to make from these institutions, because they think that once you're dealing with a microfinance institution, you are greedy. Of course, we are not greedy. And I would want Ghanaians to know that it is not greedy people who set up offices, employ people, pay them, pay utilities, and pay other things for the economy to be running.
That's a passionate appeal from Akofa. Roderick, what's yours?
2 points I want to say. Going forward, we must cut out what microfinance operations actually is. We must target what we have been set up to do. Going beyond your target would create future problems. That is one thing. And the other point is that we must have regulatory processes as well, and some incentives that will push the social aspect of microfinance. So when we are reporting, of course, regulation is hard, you know, in terms of profitability and others. We should also report on the social aspect, because once we do, we actually pick the social aspect, then institutions actually would be moving towards that direction. And when I say incentive, when we capture more of an institution that is doing more of social, then this fund that we are talking of, for instance, can be some of the criteria to assess those funds. And when we do that, we would be able to actually have the complete effect of microfinance that we should have. That I think is important that we do.
Okay, so we've learned a lot today, but I think at this latter part, what stood out is the fund, access to cheap funds. And if you've been following the interest rate discussion in Ghana, you see that yes, they are tapering downwards, but they are still high. And if they are still high in the universal banking sector, you can imagine how high they would be in sectors that don't have access to cheap funds. And that's where the problem comes in. I'll take one each. Final word, something that will touch the hearts of those who have lost funds. People I spoke to during this week. I'll start with Akofa. Very briefly, touch the hearts of those who have lost funds and put the image of microfinance in a better light in their minds.
Well, I can sympathize with people who have lost money. Making money is no joke, and to lose what you have made and made the effort to even save it with an institution, it's be very, disheartening. But I will say that the institutions that are licensed have every information on the directors and the owners on one side, and people they have given the monies to. So it is not lost. I think what must be done is that people would need to bring these
people forward?
To the notice of the regulator.
Okay.
I'm sure Bank of Ghana has created a lot of room for such people to come in and report, and then they will be sorted out.
Okay.
And also to add that, now, for the fact that there is going to be a cleanup does not mean that people are going to lose money.
True.
It is rather to make the system better, to strengthen the institutions, to provide support for them. So we should look forward to, and I pray that it will come early enough such that our business that are Istanbul will move forward.
Roderick?
Well, I want to say that, I mean, we all should remain calm because if you look at the support that is coming, actually it's targeting the client more than the institution. So, I mean, if you have your money well recorded in the microfinance institutions per what is being announced, it's actually directed towards such depositors. So people should remain calm. We should avoid actually rushing on the financial institutions, because when we do, actually it will create more problems. But as we speak, with this package, there shouldn't be any problem.
Thank you.
Therefore, populace should be calm.
Thank you. So it's a wrap here on the business edition of PM Express. My name is Philip Nanfuri, and my guest, Akofra Ayanfush, the Managing Director of JoyNews Microfinance, and Roderick Aye, he's a microfinance consultant. Thanks to all who helped make this show what it is tonight. Have a good evening.